Futures trading is risky and can result in substantial financial loss. Never put a futures position on without a stop-loss order in place.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's Friday Roundup. Well, this week we had Omni red, green, red, green. Omni was all over the map, but it picked up on the market just about every day. If you guys were with me, you saw that one day we had the highs sold, the market dropped, we bought them back. The next day we bought the lows, the market rallied, we kicked them out. That was Thursday, Friday. The days before that, we did really well with the Omni direction. We talked about a couple of things during the week, so I thought I'd review them today in our Friday Roundup. Sticking to your plan. I mentioned a bunch of times in my last few videos about the S&P. And if the S&P could not take out a certain level, 62 to 77, 1462 to 77, we would then turn and break. However, we're long-term bulls. We're heading towards that level. If we do get above it, then we have to become bullish and look for a rally into the 90s. So I did stick to my plan. I illustrated that to you day after day. When it looked like it wasn't getting above that level, we were sellers and making money. When it flipped and got above that level and showed a day of security above there, and it grew some legs, we got long and made money on that. So I'll go back in a few moments. I want you guys to look at a few quick clips, and then I'll come out and show you exactly what the charts look like now compared to those clips. So that will be sticking to your plan as far as the S&P breaking this 1462, 1477 zone. We also have the knee-jerk reaction in silver because of the May-July rollover. I mentioned we would get a silver knee-jerk reaction because we had May-July rolling over. General end options expiring on the same day, May options. Usually what happens in a silver market, you get the May, July rolling over where they're selling Mays and buying Julys to switch out of their deliverable positions into a more of a future month. The market generally will have a knee-jerk reaction down and then a blast off right out. We did see that in silver. I have a short to show you, so you'll see that in the next quick segment. We also had a 30-year bond mirror image, which gave us a projection that should take us up to about 112. I showed you where charts were, what it looked like at that point. We have more charts to show you about that. So we have mirror images, we have the knee-jerk reaction in silver rollover, and we have sticking to your plan. I want to see if I can illustrate that to you a little better and show you that I certainly stick to my plan. Omni certainly doing well. Take a look at these next clips and I'll come back and talk to you. Okay, 4/20/07 Friday. Omni flips from red to green and says, we're probably going to go higher. Guys, ladies and gentlemen, you've heard me say time after time how I stick to my guns and I stick to my plan. You've also heard me say many times, if the S&P can get above the 1462 to 1477, that big fat resistance area, and start building a base, we would rally out. We've gotten up there. We have not cracked back down. We tried to catch the crack on Thursday, and you saw we made some profit, but they never broke the bottom of this market. Now they look like they want to bull it up. And one of my rules is any market closing within 10% of contract highs on a Friday, you go with that trade. So I'm going to go with a long for many other reasons, plus the Omni says to go long. To be honest, I'm afraid of it. You know, going long up here scares me. But my long-term view, as I've told you in many videos, is just that. If we can get through those highs after the big dip we had and stay there, we got a good market. I say, let's give it a whirl and see if it gives us what we're looking for. Carried for a while is just that. We're at a level where now you got to start looking at it as bullish. And if they don't take out our stops tomorrow, I think we are ready to rock and roll on the upside. All a big if, because those stops will be in there. If it does not work, it will knock us out. And I placed my orders tonight, and I placed my stops first before my buy orders, as I always do. We did actually get the 1462 to 1477 zone that we talked about in yesterday's video. Well, boom, we nailed it nicely. It went straight up. The market went straight up and hit that level. Exactly what we thought would happen. Now, if it takes this level out and continues on, hey, 1490, here we come. This is the moment of truth. If this market does not take out these highs right here, it's going to turn around and we're going to have some big downside here. So we need to be careful. I am definitely getting long this because it looks like the prudent thing to do. But if we cannot settle above this area, we're going to have some trouble on the downside. Let's stay with our green omnis for now. Here's a quick look at the NASDAQ. That as well is moving nicely, but the NASDAQ has not yet taken out this trend line as the S&P is kissing right up against. So the NASDAQ has a little more upside potential for tomorrow. We'll see. Maybe it can run up here, run into this resistance. If it takes it out and continues on higher, we have some nice market here. Again, I have to stay on both sides of the fence. I am long-term bullish because of the long-term patterns. But if we cannot take out these highs, as with the S&P, my long-term bullishness may begin to wane. We'll see. Gold and silver look good here as well. You do have a silver May-July rollover taking place this week, likely on Thursday. A lot of times you get a knee-jerk reaction down and then a rally right out. I think we're going to get that. We talked about mirror images. Remember the euro currency double mirror image that we had up on charts? I showed it to you on a board. And we talked about now we have a very positive breakout. Boom, 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 boom. Look at that bad boy run. The mirror image can put a lot of equity into your account, traded properly. We have one more of those to take a look at. And that would be here. Remember the bonds? We had 2 days. We talked about yesterday. We had, boom, 1 day. Here comes second day. We're likely going to take out this area right here, maybe trade above 112. I don't know. I'm not doing actual analysis on the 30-year bond. I just picked up on this mirror image formation and thought I would show it to you guys. And wow, look at that go. So there is a lot of merit in these mirror images. Okay, so you saw the chart. We did the flashback to that chart. Here's how we started the S&P off when we talked about if it does not get above 1462 to 1477, we would have a turnaround. But we are bull-minded long term. You cannot be bullish a market that looks like this. So we maintained our bullish posture, just taking short trades when it looked prudent. Well, here's how we progressed. We actually took out that resistance. Boom, it went right to the next level. So we took out 62 and went right up to 77 and stopped cold. Omni says, whoa, looks like maybe we're going to end up doing just what we always had planned and going up for new highs. Let's see what happens. And you know Omni got us long for this. Lo and behold, we blasted out through this. Traded for a day, dipped down a little, and then we rallied and took off and got into the 1490s just as we had expected. Technical analysis and Omni does work really well, ladies and gentlemen. Here is a picture of it right before your eyes. Look at how nicely we moved up out of this resistance area. It gained some legs and took off. We are at all-time contract highs. The reason why we scored on this, ladies and gentlemen who follow me, is because we stuck to our long-term plan. That is so important. Never once did I sway away. We had this drop. I had a short for the drop. If you remember, we got long for the bottom, and we've been long-minded all the way back up, taking short trades as they're prudent, as I've said, and look at that, how well it's worked. Go Omni. Let's see what we have next. The NASDAQ chart did the same thing. If you remember the illustration that we had in that NASDAQ chart, we were looking at the NASDAQ while it was sitting down here. And we said the same thing. I said the NASDAQ does have some nice upside room to run, but it needs to take out this resistance in order to really go. Well, we took out the resistance, boom, took out the highs. We are looking at contract highs not very far from here, above 1880. We got above 1870 today, so nice run up as it did with the S&P. Very good long-term bull. We kept our long-term vision. We never swayed. We stuck to our plan, and boom, there we are. NASDAQ and S&P both followed in suit. So silver should have a knee-jerk reaction due to May-July rollover. I mentioned that May-July or any time silver usually has a rollover, and usually that involves options expiration on the same day. You get a knee-jerk reaction down and a rally back up. Well, here it is. Knee-jerk reaction down on Thursday. Well, bam, all the way down. Got caught in the hole. Friday came roaring back out and looks like it's going to take off into the week. So knee-jerk reaction down, big rally back out of the hole. That's due to a silver rollover. I'm not letting another one get past us. I hope you guys are going to join me on the next one. We talked about the 30-year bond and euro currency having mirror images. I showed you those quick clips. Euro currency had a mirror image last week coming into this week, the second reversal mirror image. So you had a mirror image, then another one next to it, side-by-side mirror images. We talked about how that should be a massive breakout, and we really did get what we were looking for. Very, very handsome. Look at the way that mirror image worked. Wow, what a rally, and we made new contract highs on Friday. So it has not stopped since we did this, and our projection, if you recall, was to be about this high. So we're just about in line with projection. It went a little bit higher than we originally projected. There is no real projection long term for a mirror image because it's a short term indicator, but it does give you a quick short term level, and I'm going to show that to you now. Look at the 30-year bond chart. If you remember, I said the breakout tells us we should trade to the 112 or just above the 112 level. Boom, we got out of the mirror image, did the run, up again for that third day. We just kissed under 112. If I remember right, the high was 111.26, and then off we came. But the mirror image is good for a 1-2 day trade, right? There they are. One up day, next up day. All you had to do was take your profit, and you had a great trade on the mirror image. So, ladies and gentlemen, you've seen the charts. You see that I certainly stuck to my guns. I had long-term vision. Even though we had the market, the Omni flipping up and down, I never lost track of what I thought would happen long-term. Went with those trades, stuck to my plan, and boy, did it pay off. And that's what I want you to do. If you got nothing else out of this video today, out of this Friday roundup, stick to your plan. It really does work. You can't let these market, the in and out daily movement of the markets change your focus. They're going to whip around. You're going to have static. But if you remain focused, you'll get past that static. Your plan should work if you've done your analysis properly, and you should be able to capitalize on your plan. You also did see the silver knee-jerk reaction. I will tell you this, our next rollover, I've shown this to you now so that you can see it for yourself. Our next rollover, I want you brave traders out there to come in this one with me because we're going to score on that knee-jerk reaction. I've been watching it for month after month, year after year. I always know when it's coming. I want you guys to jump in this one with me. So we'll look at that for the next rollover. The mirror images, there's not much really else that I need to say about them. You've seen how fantastic they work. It's just it's a great formation. It gives a great heads up and direction. It's almost always good for at least a 2-day trade, and we are short-term traders, so a 2-day trade is plenty. Sometimes, like you see there in the Euro chart, it just keeps going, but that was a double mirror image, which is a little different. That's more powerful. That single mirror image I showed you in the bond chart, that gave us the 2 days up that we normally would get, and then started to turn over a little. So that's my wrap up for the week. I hope you guys learned a little something there. Remember, stick to your guns, stick to your plan. It is so important. When silver's going to roll over, we're jumping in. And when we see mirror images, make sure that leg 1 and leg 2 are qualifying first, and that leg 3 gives you your direction, and then we trade out of it for the next 2 days. Okay, traders, I just want to let you know, as always, you got to keep your emotions at bay. And Mikey's segue into bay is this. The Mandalay Bay. You like it, Mike? I used the segue there. The Mandalay Bay. We're going to be doing a show there. May 14th, 15th, 16th, and 17th. It's called The Money Show. It's a free show. I will be there for at least 4 straight days. I'll be available to you. I want you guys to come on down. I can explain these techniques in much greater detail in person. You'll get much more from me one-on-one than you're going to get from this camera view. So come on down. If you're going to come down to Vegas, give me a call at oscarinvegas@gmail.com. That's not a call, that's an email, but I'm sure you know what I meant about that. If you would like to call me, give me a phone call at 718-351-2266. I'm always here. You can email me anytime you want. Bob, you're going to shoot out that new email address for me?
Yes, I am. It's going to be Oscar@futuresanalysts.com.
Oscar@futuresanalysts.com. That will be your address to get in touch with me from now on. We're going to delete that Gmail address. It was futuresanalysts@gmail.com. No longer. We will go with the new address, Oscar@futuresanalysts.com. So I like that. I like the fact that the server's pulling in on mail. This is great, Bob. Bob, you're doing a great job. Congratulations to you. Mikey, as always, you got some comments on your editing, Mike. The people liked your editing lately. Did you see that video comment?
Yes, I did. Thank you.
Heads up to Michael, everybody. Mikey's doing great out there. All right. I think I got just about everything covered here. Is there anything else you guys want me to cover before I hightail it out of here?
All good?
No,
You're all good? Ladies and gentlemen, have a great weekend. We'll be here Sunday night looking for more good trades. We closed. One of my rules, as you've heard me say, is any market closing between 10 and 15% of contract highs on a Friday is a market you should go long. We did go long. We made money. You probably could have kept the long overnight. We'll see where we go Sunday evening, but we'll be there. Okay, ladies and gentlemen, again, you say this every day. Say this every day before you trade. Keep this in your mind at all times. It will save you a lot of heartache. And that is, stops are in, emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.